What's going on, guys? It's Kyle. Welcome to the Stocko YouTube channel. Be sure to smash the like button if you enjoyed this video. Be sure to drop a comment if you're buying SoFi stock right now, and be sure to subscribe to the channel if you are not already subscribed. Everything I predicted is happening extremely fast. I told you guys specifically to invest in the SoFi stock because of the management team. And the management team got the biggest catalyst that we've been waiting for done, and that is the bank charter license. SoFi will now become the fastest growing bank stock, bank company in the entire world for the next decade. Why is that? That is because they are disrupting a legacy market with a digital shift into online 100% digital banking. I've been waiting for the SoFi CEO and the SoFi management team to drop their bombshell, and now we know what the bombshell is. The bombshell is getting the bank charter license before the Super Bowl, 100 million viewers, and offering 1% interest rate on your checking account when you switch over to SoFi, guys. That is the catalyst that is going to feed end users leaving their banks, charging them fees, no interest, 0.01, 0.02 interest, and that is going to be SoFi's major catalyst heading into 2022 to explode the user base on the Super Bowl, okay? This is what we've been waiting for, and that is the bombshell. You have a great opportunity to invest in the SoFi stock before these next couple of earnings come out. You are literally getting at SoFi at ground level. You know, the past 1 year, this stock has sold off from $28 all the way down to 12, and we're hovering right around 15 to 16 right now. Once again, this is the #1 YouTube channel covering the SoFi stock. We've been covering this bad boy for 6 to 8 months. And what I can tell you right now is to remain patient and start your 5-year hold today. Start your 5-year investment today in the SoFi stock and see what happens, okay? Because this is a digital shift in the legacy banking industry, and this has happened multiple times to the gasoline industry where Tesla has taken over, to the cable industry where Netflix has taken over. This is the next big thing. You need to be in on it now. Be sure to do your due diligence and research because this is a home run. Once again, if you enjoy this video, be sure to subscribe to the channel. Let's try and get the channel past 10,000 subscribers. Be sure to smash the like button and be sure to drop a comment. Are you buying SoFi stock now? Let's get into the video. As we can see here, the SoFi stock is exploding once again. 15% gain on the day. We were actually up 19% on the day. So what is this telling me? This is telling me the demand is there. This is not a pump and dump. Buyers are coming in, okay? We're not worried about week to week, guys. We need to be long-term on this company because they are disrupting one of the largest trillion-dollar markets in the world right now. I also told you guys specifically it is time to buy up these technology sell-offs, not just SoFi. We're talking Square, Upstart, PayPal. These are amazing technology companies disrupting legacy markets. And as we can see, we're getting a nice bounce and all of the indexes. Is the bottom end? I don't know, but it is looking extremely solid because we've had a 10% correction in the NASDAQ and a 16% correction in the Russell. So is the bottom end? I told you guys specifically buy every 2 weeks, and I think it is time to buy before February. That's when the tech earnings are starting up. Legacy just had their earnings with the banking industry. It was a total flop. 1% growth in JP Morgan, 7% growth in Goldman Sachs. Netflix is tonight. Let's see how they do. Volume is going bananas. We're talking 192 million volume today. The average is 30 million volume. This volume could get even higher, you know, once we get into earnings, okay? We could get anywhere from 200 to 300 in volume, guys. We had some massive news last night. I told you guys specifically I was all over StockTwits. Be sure to share this video on StockTwits if you can. Once again, I said specifically the Cramer one-on-one interview with Anthony Noto is not a pump on Cramer's show because Anthony Noto is running the show. I don't like when Jim Cramer recommends SoFi stock on his own, telling his viewers to buy. We heard it from Anthony Noto, and I told you guys specifically, this is not negative news or bearish news. I said this is extremely bullish. Anthony Noto hopping on, you know, Mad Money last night, and Anthony Noto dropped that bombshell, 1% interest. Why can they do the 1% interest? It's because they don't have the overhead, the cost, the branches, the employees they got to spend on. That's what these banks are doing. It's a legacy business. SoFi, you don't need, you know, branches, guys. When you go into a branch, what do you see? Do you see 20-year-olds lined up across the door? No, it's usually the older generation, you know, going to deposit checks or, you know, pick up cash and stuff like that. We're going to listen specifically to Anthony Noto one-on-one interview with Jim Cramer last night, and I'm going to give you guys, you know, some of my, you know, feedback on what I'm hearing and what I like. So let's just get into it.
Chartered bank holding company. That's gigantic. Not only does it give SoFi access to a lot more capital than it can then loan to consumers, it also means they can get much cheaper financing, so the company instantly becomes more profitable. However, because of the financial technology stocks are so out of favor in this Wall Street fashion show, and because SoFi came public via a SPAC deal, the stock is still down huge from its November highs. Less than 3 months ago, it was at 24, and now it's at 14. I think that's insane. SoFi is a bank. They even have a charter now. And bank stocks are supposed to rally when the Fed's getting ready to raise interest rates.
Boom, you heard it, okay? We are a bank. We are literally about to rally. I'm telling you right now. The banks were rallying before their earnings came out. The earnings were flop. They were crap. They didn't give you any growth. We are going to be the fastest growing bank stock in the world in a high interest rate rising environment. We are going to kill it. It's time to get in, guys.
I wouldn't be surprised if the stock has a lot more upside even after today's run, but don't take it from me. Let's check in with Anthony Noto, the CEO of SoFi Technologies and an old friend of the show, to get a better read on the situation. Mr. Noto, welcome back to Mad Money.
Thank you, Jim. Thanks for having me.
Okay, so let's go right to it. First, I don't know, Anthony, if people realize what a big deal this is. I mean, I couldn't just go to the Fed or the government and say, listen, I want to be a bank, right? It doesn't work like that.
No, it's a very arduous process. The bar is really high. You know, the Federal Reserve and the OCC and the FDIC all have a responsibility to protect our banking system, to protect consumers. We think it's critically important to do that as well. We wanted to make sure that we had the right regulatory oversight and the right capabilities to better serve our members. So getting over the bar and being granted the license to open a bank is a huge milestone for us as a company. We'll be able to serve our members much better. Our goal is to be a one-stop shop for all your financial needs, to be there for all the major financial decisions you make and all the days in between. And this license will allow us to do that in an even more differentiated way. SoFi Money will go from an account that we partner with a bank on to our own SoFi checking savings account. So we'll be able to give a high interest rate on checking, higher than anyone else gives. We'll be able to do that with no fees. We'll be able to provide overdraft protection, the ability to pay with your phone, pay with your card, pay your friends person to person. We would just ask you to do direct deposit with us against that backdrop. And so that's one big differentiator. Okay. And then, of course, as you mentioned, we'll be able to offer more loans at lower interest rates.
But, you know, this sounds too good to be true, Anthony. I mean, I'm making nothing in my checking accounts at a couple of banks. Are you telling me because of this charter, I might be able to go to SoFi and make something on my checking account?
Yes, because we have a lower cost base, because we're a digital company, not with a lot of
digital company, no branches, overhead. Guys, wake up. This is the future. This is the next legacy market to get disrupted. This is the next legacy market to get disrupted, and the banks know it's coming. The stock has been massively shorted. We know that, but I'm telling you right now, we are a cult. This is a cult stock, and we are the ones that make up the price targets and where the direction of the company is headed.
Branches, and because we're built on a modern technology stack in the cloud, we have a lot more we can give back to the consumer. The bank license allows us to fund our costs at about 50% lower, and we're going to use that to give the consumer a highly differentiated interest rate in SoFi checking, about 1%, as long as they do direct deposit with us with all the benefits that I mentioned. And that's actually being funded by our lower cost in funding our loans, since we no longer have to borrow money from big banks to lend to our customers. We can use our own customers' deposits as a result.
All right, guys, we're just going to watch, half the video. I want you to know that is the bombshell that we have heading into the Super Bowl, okay? This is the massive catalyst that we needed, guys. This is going to get millions of people to switch to the SoFi platform because, we have something that the banks won't be able to offer because our overhead is much lower. We are going to be able to offer 1% interest rate. And I'm telling you right now, if they market that on Super Bowl, 100 million viewers, I don't think you guys understand what kind of numbers we're going to be doing. These are some of my growth projections, guys. I want you guys to see. Of course, we had Q2 2021, 279,000 members. Q3 2021, 377,000 members. You need to understand this was the second most all time, and this only had 1 month of NFL marketing. This put us at 2.9 million members. What are my predictions, guys? My predictions for Q4 2021, I believe I'm being very conservative. 400,000 members or more. Why? Because we had 3 months of NFL marketing. Some of you guys are going to say that's underestimated, okay? It could get into the 450, 500. I'm just telling you guys what I expect to happen. Q1 2022, this is the big one, guys. This is the Super Bowl. I expect 750,000 members. Why? We're getting 100 million viewers to watch the Super Bowl. NFL playoffs are in this earnings report. Super Bowl, 1% interest rates, guys. This is the bombshell. This is going to get millions of people to switch to SoFi in 2022. And guys, if you want to know what my price target is, I'm going to continue to stick to my price target of $45 or higher. This is a good premium, okay? This is a 24x price to sales multiple. To show you guys what Bank of America is, a legacy company, is they're trading right around, let's say 5x multiple, okay? So they have a 5x multiple right now, and I believe SoFi can get into the 20 to 25x multiple. Why is Bank of America getting a price to sales multiple of, 5 right now? Take a look at the last, 4 years of growth for Bank of America. Yes, I know, guys, they do insane revenue, but guess what? It has topped out over the past 50 years. Take a look, guys. 2017, they had a 10% increase. That is amazing. That's before, these technology fintechs are really bringing up the heat. 3% increase from 2018, 17% decline from 2019, another 7% decline into 2021. Do you see what is happening? This is pitiful, guys. We are talking 2 years of declines happening, and the other year a 3% incline. So this is the past 3 to 4 years of growth. That's why you're getting a 5x multiple. We are going to be growing at 60% growth or more this next coming year. SoFi is expected to hit revenue projections of 1.5 billion. I mean, can they surpass this? We're going to have to see. I think a lot of it has to do with that Super Bowl. So we're going to have to wait and see what kind of users are coming in, because that is going to be our projections for our earnings in the next couple of years. And yes, guys, it looks like the earnings are announced for February 9th. We have the earnings whisperer, 291 million in revenue, 17% loss. So I think this has to do with the warrants. Okay, we remember there was some cost basis in those warrants. I think SoFi is going to take like a $80 million one-time charge or something like that. But after this last earnings, guys, we could be heading for a profitable quarter in Q1 or Q2. It is definitely possible. We need to see what that bank charter could really do. It's going to lower our cost of capital from 3% down to like 1%. User base is the key. Customer growth is the key right now. And once again, guys, these tip ranks analysts, I mean, all of them are giving us pretty much no sells, which is a good thing. But man, these price targets are not adjusted to the bank charter license at all. $21 price target right now, 3 holds. We got a guy who just had a $16 price target, 0-star analyst. We just, pretty much ripped through that this morning. They need to get on board, because this is not, updated at all, guys. They are not pricing in the bank charter license. Maybe they're waiting until earnings. We're going to have to see, but I'm telling you right now, we are going much higher than $21 this year. Once again, I still think this is going to hit $45 by the end of the year. That's a 3x if you're investing around the $15 range. So taking a look at the SoFi stock, we're up about, 15.5% right now. About 1:30 p.m. and we were up around 19% at one point. So I want you guys to know I just switched over my TD Ameritrade. All of my shares are going into my SoFi account. I'm really waiting on SoFi to get the options before I really go all in and switch over my Robinhood, because I do like to play options from time to time. And I want you guys to know I was buying this stock over $20, months ago, and I've been taking advantage of these dips. As you guys can see, I'm up about 17% right now, and I continue to average down all the way from $20 all the way down, to the $12 range. So that's what you need to do. You need to be patient, buy up these dips, dollar cost average, and that is the key to success when investing in a company. So we are up pretty solid right now. So I actually have over 9,000 shares, including my TD Ameritrade. Those shares are a little bit higher. So my overall average is right around $15. So I'm very happy with this investment right now. You got to remain patient. I believe, long-term investment, this is definitely going to 10x. You got to remain patient. This is a legacy market getting disrupted. Once again, continue to buy up those dips, average down every 1 to 2 weeks, and you should be successful in the long term. And if you made it to the end of the video, I want to say I really do appreciate it. I enjoy doing this video for you. SoFi is doing everything right. The management team is in place. They got that bank charter license. We are looking golden heading into these next couple of earnings. And also the Super Bowl is going to be a massive catalyst now that SoFi offers 1% interest rate on their checking account. So we're looking extremely bullish. Profitability could happen in the next 1 to 2 quarters. A full profitable year could be happening in 2023. You're investing in growth. As you guys can see, the bank stocks like Bank of America are 5 price to sales, 5x. We should be trading at a much higher multiple of around 20x, because we are growing, 10 to 20 times faster than these bank stocks. JP Morgan actually gave you 1% growth. Now is not the time to invest in value. Now is the time to invest in technology, innovation, growth, fintechs, and that's what SoFi stock is. Once again, my name is Kyle. Hope you have a great day.